Welcome everybody in Residencia. Here, Residencia, we help client, we help business structure that operates internationally to be bulletproofed against some tax audit from international tax foreign jurisdictions. So we help the entrepreneurs to collect all the proof, all the documentation already built in with the daily paperwork operations in order to have a shield against tax audit. So we help entrepreneurs to have ready all the file, all the documentation to prove that their business abroad, their offshore business abroad is genuine, it doesn't break any law, and we have bulletproof solutions in order to basically pass any type of tax audit without problem without risk any fines or any requalification of taxes or requalification of tax residency, etc., etc. In this specific video, I would like to talk about the problem of moving into a different jurisdiction exploiting the digital nomad visa that a lot of countries all over the world are promoting in order to give you the permission to stay in their territory. So we are going to discuss about the digital nomad visa. Okay, so it could be a very nice, attractive solution for you if you want to move to a specific country, you love that country, you love that specific lifestyle, but one thing is to have the visa to give you the access to the territory of that country. One thing are taxes that then you have to pay because of your time spending in that specific country. Okay? So you also have to look at the consequences, and here in Residencia we help you, client, to understand how this could affect your personal tax situations and how to collect all the paperwork in order to be bulletproofed against tax audit in the new jurisdiction of residence if you're moving for quite a lot of time. And basically we understand exactly if this visa, this typology of visa, and based on your length, based on your journey, based on your residence in this new country, how it affects you in terms of taxes. Because the first element that we have to consider is the following. So you're going to stay in a country long term, normally, a lot of people say over 183 days, but this is not the only criteria. The criteria that makes you tax resident in a country depends on a lot of factors. Depends on local national laws, depends on double treaties agreement between the country in which you're moving, which you obtain the visa, and your former country residence. They might have different criteria to determine the tax residency. So we have to find local tax laws which could have 183 days rules, or building ties with the country, both, or double taxation treaty between the new country in which you have obtained the visa and a former country. So, and based on the double taxation treaty, you have the ties breaker rules, which determines exactly how to find out which is your tax residence. So let's imagine you get the visa, you move in this new jurisdiction, then you become tax resident in this new jurisdiction, and your worldwide income, if you have multiple stream of incomes and you have assets abroad, if you have financial assets abroad, everything must be reported and taxed. First you report, then probably you tax those reporting in the new country destination. So, but your worldwide income. So your worldwide income will be affected with the new taxation as individual. I'm talking about as individual. So the fact that you obtain the visa might trigger this situation here. I say might trigger because you might also not trigger it. It depends of your behavior, right? That's the point. So this is the first point. It affects your worldwide income taxation if you overstay more than 6 months, or if you build too many ties with that country, or if the treaty between the two countries determines you as a tax resident, and the new worldwide income will be affected by the new taxations. The second point is the permanent establishment. you can trigger this situation here. So this is the classical case when you have your online business, you run it through an LLC, probably in the United States or in other jurisdictions, but LLC is the classical instrument used by all the digital nomads, a lot of digital nomads all around the world, and basically you might trigger this problem. So the problem the permanent established is when, since you're running your business in a new jurisdiction in which you have obtained the visa, it's not necessarily bound to 103 days rules, because here is that your foreign company or LLC is owned by you and is managed by you, and the place of effective management is you. You are the one that gives all the directive, impulse, and the business and business development to this company, because it's composed by one person. This is the most common example, okay? Classical case. Then, the problem is that the country in which you are living now is not just tax your worldwide income, but it also trigger your permanent establishment. So it makes that LLC a company, a local company that has to pay local corporate tax. So your company must pay local corporate tax. Okay? And probably they tax you also on your income that your company generated abroad, because the country in which you're living could requalify this foreign company as a local one, triggering also the issue of tax inversion. Okay? So these are basically the two main problems when you move in a specific jurisdiction, apply the Digital Nomad Visa without considering the potential double effect or side effect of your personal income taxation situation and your company taxation situations in this new jurisdiction. The reason why you need in advance to understand how this works is because you might screw up your entire structure, and your structure could be first get taxed after years in the new jurisdiction which you are living. And when this happens, it happens that years after the new jurisdiction realizes that you didn't pay taxes because they qualify you as a permanent establishment, and they trigger a tax inversion issue, plus the taxes that you have already paid in the United States. And if there is no double agreement between the two countries, you might risk to pay taxes twice, on the United States or wherever other jurisdiction you have your foreign company, plus in the country in which you have established your new life, and basically in which you have established your new work business activity. Okay, I hope I was clear. So in the description below the video you will find our calendar link if you want to book a consultation with us, or if you want to analyze not just the taxation along with the taxation situation that could change, but also if your structure will be bulletproofed and shield against this tax inversion problem, or the permanent establishment problem, or if you as individual you want to be bulletproofed again, seeing your tax resident requalified in new country in which you have obtained the visa, because you can also obtain the visa which makes you gives you the right to stay in the country, but you can stay less amount of time, or you're not going to build ties with the country. There are also techniques and behaviors to avoid to build ties with that specific country, even if you stay more than 183 days. There are also countries in which the 183 days rules doesn't exist. You see? So this is what we do here in Residencia. We help you to understand if the Digital Nomad Visa, for example, is one of the possibilities that opens you border in different jurisdictions, but without risking your existing international business structure. See you to the next video. Bye.